Hey all, welcome to ShareTreck. This is Raj here. Friends, let's start off with our dashboard. As you can see, the fear and greed index shows that the market is relaxing a little bit. Yesterday we were at 37, we are at 39 today. So this is contrary to what should be happening, but that's the way the market is reacting. As you can see, there's a bunch of headlines out here that shows that we have had an impact of tariff already. Volkswagen posts around 37% drop in first quarter profit, says Trump tariffs could weigh on outlook. And then as a result, Trump signed order easing some auto tariffs. I mean, when you're doing such a big policy decision, you got to think through all the possibilities, simulate it in computers. We have AI and computers, and then make a policy instead of having to haphazardly roll back. But again, Trump has rolled back out here some auto tariffs, and auto giant Stellantis suspends full year guidance due to uncertainties over Trump tariffs. So these are some of the headlines out there which I saw in CNBC, the main panel of CNBC. And elsewhere, you can see that the fundamentals are getting a bit weaker. Homebuyer mortgage demands drops further as economic uncertainty roils the housing market. And Supermicro, I was hoping it would come out in a much better shape. I'm glad that they are giving us some factual information, even if it is negative. But the shares have taken a big hit already. And the next headline is exactly what I hate about tariffs. I have experienced it in India when I was growing up. Nucor CEO backs Trump tariffs, says steelmakers' order backlog is the largest in its history. Now, this may be good for the business because they have a huge backlog, but it's very bad for the consumer and for the economy. Like in India, we used to, in the earlier days, I'm talking about in the early 70s, we had to wait for 10 years to get a phone line, wait for 8 years to get a car, wait for around 13 years to get a scooter. You had to book it and you had to wait, and there was a black market that was flourishing. That was because of tariffs and the fact that there were limited manufacturers and they had order backlogs. Now, US is going into the same situation. This is absolutely ridiculous. And then we have Waymo Toyota strike partnership to bring self-driving tech to personal vehicles. Now, Google with Waymo is silently making a whole lot of progress, practical progress in self-driving, and whereas Tesla is getting all the premium. So I still think that Google stocks are way underrated. The PE is very juicy and attractive in Google. Now let's look at the next headline here. Trump says, I think we'll have a deal with India on tariffs and trade. Friends, I have been scanning the Indian newspapers. I do not see any whiff of anything about a trade with the US as such. So we'll have to see what they pull out of their hat. And then Trump had a rally in Michigan to mark his 100 days, and he bashed Powell. And he's saying tariffs are great in the 100 days rally that he has had. So bashing Powell doesn't help. Powell will do what he needs to do when he does it, and he has to be left alone. This kind of reduces the credibility of the US dollar and the bonds. So I think, anyway, this is all useless complaining. Trump is going to do what Trump does, but the reaction is as Mark Mobius says his funds hold 95% in cash on trade war risks. So Mark Mobius is a famous fund manager, and he's having 95% in cash. That can show how much people who are actually looking at all these economic undercurrents are fearing what would happen in the market. There is also talk of a mild recession as the best case from Jamie Dimon. If the best case is a mild recession, the normal case could be worse than a mild recession. So that's the thing that we have to remember in mind, and the markets have not yet reflected that, and they could do that suddenly and the drop could be precipitous. So we have to be careful about that. And Trump complained to Bezos before Amazon said it scrapped idea to display tariff cost. Now, what had happened was Temu was displaying tariff cost, and Amazon has got an equivalent of Temu, which is basically aimed at truckers, and they were considering putting a tariff cost out there to give an idea of what exactly is the actual price of the product and why they are paying more. And immediately the White House was on top of Amazon, and Amazon caved, and they decided they are not going to put the tariff cost on. Whether the tariff cost is on or not, it doesn't make a difference, because at the end of the day, customers paying higher. Now, even during the COVID period, Trump had pulled a similar stunt. He said that we should go slow on testing so that the numbers do not go bad. So whether the number goes bad or not, people who get COVID are going to get COVID and they're going to die, and the numbers are going to be what they are, whether you record it or not. So this is some of the way in which Trump kind of obfuscates the fact. So everything is a bit of a mess. We just are waiting for the market reaction, and then the market reaction may not be triggered by this economic data, because if you look at the economic data that's going to come today at 8:30, we have the GDP growth advance for Q1. Now, what's going to happen in this GDP growth in Q1 is that the front loading of all the purchases before we had before the tariff becomes effective is going to distort the picture for the GDP growth. And then core PCE, personal income and personal spending are going to be for March. Now, if you look at what I have here, this is the timeline of the tariff until the end of March. So what we had was 10% tariff on all imports from China, announced on February 1, effective on 4th of February. On March 4th, Canada and Mexico had the 25% tariffs imposed on most imports from Canada and Mexico. And there was an exemption, 10% was on Canadian energy. This is what the US imposed on 4th of March. And on 4th of March, tariffs were doubled from 10% to 20% on all Chinese imports. 10th of March, China retaliated with 15% tariffs on chicken, pork, soybeans, and beef. And on March 12th, global steel and aluminum tariffs of 25% on all steel imports, and aluminum tariff raised from 10% to 25%. We still don't have that 125% tariff on China, which is what triggered the massive amount of inventory cancellation or order cancellation or shipping drop. So those things didn't happen by the end of March. So we have not yet seen the worst in the economic data that's going to come in today. That's my point that I'm trying to make. And with that said, I think I'd like to go and have a look at what we have in the indices. Let's go on to futures first. You can see that S&P 500 futures is down 0.27%. This could change when the market opens, but right now it's down. Then we have, this is a 5-minute time frame. Let me go to a 1-day time frame and recalibrate the chart. So this is what the chart looks like. So our resistance for today for S&P 500 is 5,644. Our minor line of support today is 5,528.25. There are some bad headlines from various companies which are reporting earnings. Those could also have a little bit of impact on today, and this minor line of support should be able to hold us for today. If not, then we have a huge area of support which starts at 5,502.50. So that's our next line of support. And if you look at the MACD, it's trying to weaken, and momentum also is dropping a little bit. If you look at Nasdaq, we are down 0.49% in the futures at this point of time. We are still somehow staying into this area of supply at 19,553.25. And that's going to be the support for the day to start with. But the second level of support is going to be 19,255.25. If we were to go up, I think our resistance is at 19,747.75, and then we have a dynamic resistance at 19,944.50. But I'm thinking that today the trend has to be downwards because the fundamentals do not support, and hopefully the market finally starts to realize that. And then we have the dollar index, which is just above this line of support out here at 99.361. And MACD is turning bullish, and momentum is just picking up, but it's way low at this point of time. If you look at 10-year yields, I think the bull flag has kind of trying to turn into a bear channel. So this line of support out here is what is going to determine what will happen next. If we bounce off this line, then we'll be creating some kind of a bull channel out here. But if we fall below this, then I think the yields have to start falling down. I think the possibilities of yields going down further is very minimum, given the fact that the market is looking really bad. But then if employment drops, the Fed is likely to come and cut the rates because their dual mandate is employment protection and inflation protection. So if inflation goes down, GDP quarter over quarter goes down, and employment goes down, the Fed has no option but to reduce the rates in order to support the dual mandate. And that's where probably the yields will start going down. But the bonds, the bond vigilantes will always look at the status of the economy, and then we'll start looking at the rating agencies like Fitch and others. What are they going to say about the US economy? What's their rating going to be? Because any bond issuer is always rated by the credit rating agencies on how reliable they are in paying the interest and paying back the capital. And with around 32 trillions of debt, I don't think US is going to be facing a really good credit rating. So all those things come into play at that point of time. That's the reason why I'm a little bit suspicious about what's happening here in the bonds. I think the interest rates are supposed to go up, at least from the bonds perspective, making it expensive for the US to borrow. Now let's look at indices and see where we left yesterday. Our resistance for S&P 500 today is at around 5,638.40, and our support is going to be at 5,486.51. And then if you look at the MACD, it's absolutely bullish. Momentum is also charging up, and RSI has plenty of room. So there is nothing to stop S&P 500 the way the market is looking at it right now. It can go all the way up to this resistance, and then it can be pushed down. So let us see what happens today. We have seen the futures showing that the market is going down. Hopefully the real-time market respects that and starts moving downwards, because that's where it should be going. And then let's look at NASDAQ. NASDAQ is bullish in the MACD. Momentum is also above average, plenty of room on the RSI. And we have broken through another key resistance, which was at 19,460.48 yesterday. And today we are above that. So this is a very big positive for NASDAQ. And the next stop, I think, is going to be, I'll put a minor line of resistance out here. This is the minor line of resistance that I can visualize. So this is the minor line of resistance. I'm using our coloring convention to make it orange. So our resistance is going to be 20,344.83. Next, we go on to QQQ. QQQ has a minor resistance at 484.38. And right now, in the pre-market session, QQQ is at 472.50. So the resistance, so the support continues to be 468.37. I'm going to mark that orange because it's a minor line of support, and the resistance out here is going to be marked red, and it's going to be at 484.38. So these are the two ranges in which QQQ has to work today. And VIX has gone up a little bit. It has gone up 2.90%, but this diagonal line of support from the previous channel is going to be the resistance for us up here. And today the resistance for VIX is somewhere around 30.04. And we look at put call ratio, which is bullish at this point of time, and gold is dropping further. I think there's a little bit of profit taking going on out there, and maybe margin covers and other things. So it's after having reached the all-time high and reached peaks, and having been overbought, it has started cooling off. So I would expect that when economic data comes in, and if the market starts going down, gold will start picking up. So this is a bullish pennant that I am seeing out here, and we're going to break out on the upside and reach new highs for gold. Maybe we go and touch 3,600 again all the way. That would be the aim out there. So I would try to buy a little bit of gold ETF, physical gold ETF today if possible. And then XLP had improved yesterday. So we'll see what happens today when the market opens. Let's go on to AI and look at NVDA. NVDA is down 2.16% in pre-market trade. So our resistance for today is 107.01, and our support for today is going to be 106.04. And the support at 106.04 is going to be strong because it's going to coincide with our diagonal line of support, which is coming from here, from almost, let us say, 18th of February. Let us trace this down and see where we are for today. So for today, this diagonal line of support is at 112. We are already at 106. So let us see where we are today. Yeah, today we are at around 107.20 and we are at 106. So this diagonal line of support becomes a diagonal line of resistance. So our resistance is very strong today. I would say it's at 107.11. Our support is going to be 106.13. And if we break down below that, we go to 102.05. I don't see that happening to NVDA. NVDA should stabilize somewhere around 106.04 today. Then we look at Meta, it's down 1.05% in pre-market trades, and it's at 548.67. And our support at 549.77 now becomes a resistance for today. And our support at 517.13 is the support for today for Meta. And you look at Google. Google is down 0.57% in pre-market trades. Our resistance is at 164.59, and our support today is going to be at 159.84. If you look at the MACD, it's deteriorating, and the momentum is also dropping, but it's above average. Amazon is down 0.86% in pre-market trades. Support continues to be at 184.31, and resistance continues to be at 191.92. And our MACD is still bullish, but momentum is flattening, and it's just slightly above average. And we have earnings coming out on 1st of May. We'll see what happens when Amazon reports its earnings. It will give us some idea about what's happening with the shipping and other things. Last time when COVID happened, Amazon had its own cargo planes chartered, and it had built its own logistics infrastructure. So that could help Amazon at this point of time to avoid the container cost escalations that typically happen when everybody scrambles for rerouting supply chains. And we saw that during COVID. So Amazon would be able to give us some idea about what their plans are. Amazon is a logistics expert, and whatever Amazon does, that's the best case scenario in this situation with regard to costs related to shipping and supply chains. Walmart is another great example. So we have to see what those guys are saying in their earnings report, and that will give us an idea of what's the best case scenario. So with that said, I'm going to look at Apple, and Apple is down 0.55% in pre-market trades, and its support continues to be 207.41, and its resistance today is at 217.66. Apple has got the major impact from China. They are talking about moving major production to India. And now there is some geopolitical activities happening out there. If you see, the proxy war between US and China is going to end up being a war between India and Pakistan, because we have had a little bit of terrorist activity in Kashmir. Some tourists were shot and killed, and there is an escalation going on out there with China supporting Pakistan. And India is not yet talking about any trade deals with the US, but US President Trump is saying we are very close to a trade deal with India. So the message underlying would be that for US to support India, India will need to have a trade deal, or else China is going to be supporting Pakistan. So we have to watch that space. It's a geopolitical space that's going to have some impact out there. But suffice to say, Apple is going to move more of its production into India, and we'll have to see if India can ramp up and do what China had done for Apple. Now let's look at Microsoft. Microsoft is down 0.04% in pre-market trades. Support is going to be 387.01, and we have 396.49 as the minor line of support. Hello, Lux. And then we are looking at Tesla. We have Tesla down 1.45% in pre-market trades, and we have support at 268.58 for Tesla, and a resistance at around 298.48. We just saw how Waymo has tied up with Toyota, and it's going more into personal cars. So even though it looks a bit clunky, practical economic delivery of revenues for shareholders is coming through Waymo as against with Tesla, but Tesla has all the premium. So I'd be watching for Google to increase its PE, and I've got a lot of Google. I have been dollar cost averaging. I'll be doing more of that. And then let's go and look at Oracle. Oracle is down 0.72%, and it's got a resistance at 143.01 and a support at 135.93. And MACD is still bullish, and momentum is also above average, and it seems to be picking up a little bit. We look at AMD. AMD is down 1.23%, and we have a resistance at 96.13, and we have a support for today, which is going to be somewhere around 87.21, which is this diagonal line of support, which has been a resistance for a previous bear channel. And our MACD is still bullish, but momentum is dropping. It's going to be almost at average at this point of time. And AMD has been a bear in a bearish channel for a long period of time, but I've never been able to pull myself to put into AMDS and try to short it and make some money out there. I tried intermittently, but I've not been able to be successful out there, and my entry time was wrong. But this time around, I think I'm going to watch what happens and maybe buy closer to this line of resistance. So if we come down below this, which we have already done in pre-market, but we have to see when the market opens what happens. We have this economic data is also coming up. If the market responds properly to the economic situation, then I think that that should be a good possibility to short AMD and make some money as it comes closer towards this diagonal line of support. And then look at SMCI. It had a big beating, and I'd already mentioned in my introduction that I thought that SMC had dodged the bullet after clearing all their accounts issues. They are doing the right thing by saying that there are problems in terms of demand and other things. I always appreciate that, but that's going to be rewarded by the market with a drop in share price. We have an 18.19% drop in share price with their outlook being a bit bearish, and we have a support at 34.68, which has now become a resistance because we are already at 39.48 in pre-market action, and therefore we are going to look at the next support being at 26.43, and the earlier support at 31.15 now becomes our immediate resistance for today. And another resistance for today is going to be this diagonal line of support. We are exactly on the resistance at 29.64 right now. So I'll leave this diagonal line as it is. I don't want to jinx it for us today, but most probably this is also going to turn into a line of resistance as the market opens. Let's look at Broadcom. Broadcom is down 0.54% in pre-market trades. Support continues to be 186.27 and resistance continues to be 198.38. Then we have Palantir. Palantir is down 1.25% in pre-market trades, and we have support at 101.77, resistance at 124.04. I'm still hopeful of our double bottom target of around 126.37. So we'll see what happens when the market opens. SMH is down 0.58% in pre-market trades. Support continues to be at 201.52 and resistance is at 219.21. This is a minor line of resistance that we have out here. MACD is still bullish, momentum is still above average, but I think where NVDA goes, SMH will go. Then we have Tempus AI for our friend Hot Dog. Tempus is down 1.97%, and we have a support today at 53.23, and Tempus is exactly at 53.23 in pre-market trades. If it manages to break down below this, I think our next support is going to be at around 43.04. It's a huge fall indeed, but it's not going to be a one-day fall. It's going to take a little bit of time. It will be over a period of time that it falls down. So that's the way I'm looking at Tempus. And finally, Celsius. Before we close, Celsius is down 0.73%. And we had a support at 35.27, which is now becoming a resistance for Celsius. And the support for Celsius is going to be at 31.97 today. MACD is already bearish. Momentum is still above average, but it's dropping very fast. And we have the earnings coming out on 13th of May 2025. So that brings me to an end of today's review of our watch list. And if there is any tickers that you want me to have a look at, we could do that before I wind up. So please let me know if there is any ticker that you want me to check out. I'm going to give it a few seconds and then I'll wind up the day, go for my breakfast and get ready for the pre-market trade and see how things go. So thanks for joining, Hot Dog, and all the people who are on the live stream. Thanks for the encouragement. And hopefully the market starts responding to the reality of what's going to happen with all the tariffs. Thanks and take care, guys. Take care, Hot Dog, and we'll see you later.